welcome back. Still tuned into First Trades. Avan Dabash joining in. 11,273 on the index. We're constantly monitoring what's happening in the world of precious metals as well. For now, 160-point bump off on the Sensex. Hindustan Zinc, Hindalco, Lupin, Cipla, Dr. Reddy's and Bajaj Finance. Those are some of the weak links in today's trading session. But would be interesting to find out what the outlook has been for companies like Symphony in terms of the peak season sales having been dampened due to the COVID impact, the pile-up of inventory, as well as how the company is looking to leverage the Atmanirbhar Bharat opportunity. Joining in on the show, we have Nrupesh Shah. He's the ED at Symphony. Thank you so much for taking time out. Mr. Shah, understandably, it's going to be a weak quarter due to the impact of the pandemic, but let's talk forward-looking, what the outlook is in terms of demand returning as we are seeing an opening up of things. Do you think that from the pre-COVID levels, there has been a substantial recovery or change in sentiment?
Yeah, so as soon as lockdown was lifted, that is starting third, fourth week of May, there was quite buoyant demand. And hence, just during a couple of weeks, in fact, almost 50 to 60% of the inventory was lifted. And then after rain started, so probably vis-a-vis peers, we were, in fact, the best place. Not only that, even during lockdown, we had launched unique online to offline delivery model, much beyond e-commerce, and that was a unique experiment, not only in air cooler industry, but entire consumer durable industry, and received well. Having said that, at the end of the season, at the trade level, I think we were left with almost 40% of the inventory. However, considering our off-season initiatives starting July, we believe that there should be reasonable normalcy over a period of time. But having said that, certainly there will be spillover impact during the current financial year on account of bad summer.
Okay, fair enough. And, with the kind of loss that you've seen in sales in the peak season, what is the growth trajectory over the next few quarters? Do you think that we will see some sort of a turnaround by FY21, or perhaps that recovery is going to take a little bit longer to play out?
So as of now, we have clear visibility for September quarter and December quarter. And certainly September and December quarter seems to be much better than the June quarter, but still YOY there is likely to be, in fact, most probably there will be a degrowth. However, because of our business model and various initiatives, we are quite confident to maintain the gross profit margin of approx 50% on air cooler product. Coming to summer of financial year 21, we are reasonable confident that we should be really very well placed. And in the past also, not on account of pandemic, but whenever there was a weak summer, as soon as summer sets in, trade inventory gets lifted, it gets cleared off and normalcy does happen. Even in current summer, with many trade partners, there was a normal inventory or zero inventory. And even from them, there has been good collection even during the month of July.
Sure. If you could help us understand how exactly were your international operations, how did they pan out, and how is the demand in other countries as opposed to India?
So as far as Symphony India was concerned, there was a massive degrowth. But in respect of our international subsidiaries, the degrowth was just about 10 to 15%. And in a way that has de-risked in terms of the consolidated sales. And down the line, as we successfully did with IMCO Mexico, even with Climate Technology Australia, which is our material subsidiary, we are confident to turn around well. However, during the quarter, especially with our Australian subsidiary, there were major jump in terms of variable costs on account of higher freight, mainly because of air freight of many components. Some of the components we had to source locally instead of import, and hence there was one-time major jump in the costs. But we have already found the alternate, and starting current quarter, those variable costs, even at a level of climate technology, will be well under control. And there the COVID impact has been late. So starting current quarter, we foresee there may be some impact, but it won't be as severe as it was or is likely to be in Symphony India. In fact, during the quarter, in respect of two of our subsidiaries, that is IMCO Mexico and GSK China, even though there was a degrowth, but contribution margin percentage and gross margin percentage, there was impressive jump.
Point. Also wanted to understand, in terms of operations, what exactly is the status of manufacturing facilities? How many plants are currently operational, and what sort of capacities are you operating at? Given the phased unlocking which has transpired, and of course the massive dip in demand as well.
So we do have outsourced business model, and we do have about 11 outsourced manufacturing facilities spread over the country. 60% plus have resumed the operations, and normalcy is almost there. In the rest of 40% OEMs, it is like 50 to 70, 80% of the normalcy. However, on account of lull as well as slowdown, some of the major bill of material related and value engineering related initiatives, which were like to take a long time, we have initiated them, and they are likely to lead to major cost reduction and benefit once normalcy is restored. However, again, answering to your question, starting current quarter end, by and large, production should be normal, and at a company level, whatever was the backlog of the inventory, starting current quarter itself, there will be absolute normal inventory even at a company level.
Hear that you sound fairly optimistic about things returning to normalcy and demand picking up, consumer sentiment as well changing. That's the outlook coming in from the management of Symphony. We'll slip into a very quick break. Do stay with us as we talk about Metropolis's Q1 numbers when we're back.